Friday, March 12th, 2021, Monaco 64, home of alternative economics and contrarian views. Today, we're going to touch upon a video. It's like a part two, if you want to call it, back in November of last year about the silver price, where I expect it to be roughly in around 4 years in 2025. And I'll explain why 2025. I expect a much higher price, of course, in terms of fiat currency. And before I go into that, I'd like to talk a little bit about the frustration that people in the precious metals camp, you want to call them silver bugs or gold bugs or whatever. And I would say, yes, it's a denigrating classification to call people a gold bug or a silver bug. I think personally we are people who understand the nature of money, the nature of fiat currency, the nature of inflation. That's why I always go on about the true definition of inflation, which is the excessive creation of money and credit, not backed by any real savings. And we've had that in spades, of course. So I like to give people a couple of analogies today. I was just going to do one, and then I thought, oh, maybe I'll do the other one too, of what I think we're going through right now in the precious metals camp. Yes, it's frustrating. We get the people in the crypto camp saying there's nothing better than Bitcoin, gold and silver are finished, and all that malarkey, right? All that baloney, I would say. So what's my first analogy? Well, my first analogy is that the powers that be, they know what's coming monetarily because, yes, they come out and tell us, the public, there's no inflation, that there's danger of deflation, that everything's going to be fine, the economy is going to recover. And yes, most people buy into that. But what we see in the gold bug or silver bug camp is a dark winter coming, if I can borrow that term. A dark monetary winter. We can see the storm coming. We can see the winter coming. And we're preparing by buying coats, snow boots. We're changing the tires in our cars to snow tires. Yes, we're chopping wood in the forest for the fireplace, while the general public has been told by the powers that be that summer is coming and they're all doing the wrong things. They're not going to survive. And yes, it's so outrageous what's going on right now. That's how it feels like. What about the second analogy? Well, the second analogy is one that's been used many times, and I think I've used it before. It's the Titanic analogy, and that's the one where some of the passengers in the Titanic realize that the ship has hit an iceberg and it's sinking. And they get on the lifeboats while the captain and the crew tell the general public not to panic, to go back inside, go to the dance floor and dance, and everything will be fine. And people rush back in, and those who go on the lifeboat, they save themselves. And then at the last minute, when people realize that the Titanic is sinking, it's too late. And that's how I feel. Yes, it's very frustrating what's happening, but the fundamentals haven't been better than this forever. The inflation we've had in the last 2 decades is multiple times more than what we had back in the 60s and 70s. It's truly amazing, just the amount of debt that the world has created, especially the governments, but also corporations, individuals. It's truly, how can I say, a sight to behold. I mean, you look at the policies as well. Central bankers are telling us they're going to keep the short-term rates at zero at least for another 3-4 years. We saw yesterday the ECB announced an increase in their QE. This morning, of course, we're seeing yields go back up in U.S. yields overnight here in London, and that's weighing on gold and silver. But you can bet, unless they want everything to collapse and implode, which would still be good for gold and silver, because when a deflationary collapse occurs, and you might say, what do you mean deflationary? Well, because if you stop inflating like they are, it's all going to collapse. The deflation is not lower prices, it's destroying the money supply, and that's what they would do. And I don't think they want that. They'd rather have inflation, which will, of course, lead to a collapse as well, a hyperinflationary collapse. So yeah, they're going to continue to inflate the system. They don't have a choice. The debt is continuing to grow. The stimulus are going to continue to come. I read Rafi's newsletter yesterday. He said he's going to get $20,000, $400 from this new stimulus, mainly because he's got a big family. He could have gotten more, but his youngest child, he hasn't been able to go to the U.S. consulate in Israel to register his youngest child as an American citizen, so he's not getting as much. And I don't blame him for claiming it if he can. And he's going to buy gold and silver and mining companies with it. You might as well do it. But just think about it. Someone like Rafi can get that. And someone else, maybe in the US or anywhere around the world, has to work hard to earn $20,000. So if the government can just give it to you like that, it makes you wonder, is it really worth anything? It's not, right? And that's where we're now. We've been told summer's coming, monetary summer's coming, get out and get ready for it, and we're going to have a winter. The other thing I would say is the debt. Let's look at the debt, the national debt. We're at 130% of GDP almost here in the US, of course. In the UK, it's probably just as bad. In the UK, they hide a lot of the debt that they had to take on to save the banks. So I would say it's probably even more than that. But yeah, we're at 28 trillion. We went over that a few days ago or a week or so ago. But the worst thing though is if you go forward 4 years and you see here that the debt is at almost 50 trillion, and that's with the projections from the Congressional Budget Office, which usually err on the side of caution in terms of how much debt there will be. So, and it also errs on overestimating how the economy is going to do. Yes, this year and maybe early next year, we're going to be told, oh yeah, the economy is doing really well. The Biden stimulus helped the economy, but they're not going to tell you that maybe if the economy goes by 3 or 4%, that 10-15% of that was a deficit spending. So if you take out the deficit spending, the economy is still in a depression. GDP doesn't really matter either. It's just a Keynesian measurement. Real prosperity is measured by how well people live, how well people are able to produce something of value to society, how independent and self-sufficient people are. And are we really making people self-sufficient when they expect a check from the government every 6 months? Here in the UK, it's called furlough. I'm sure they're going to graduate that into some kind of UBI. So yes, that's what we have. It's very frustrating, but that's the thing about precious metals. You're fighting the powers that be. You're fighting the people who control the money supply. The old saying, give me control of the money supply and I care not who makes the laws, right? But yes, the money supply, they mean the currency supply. And we can fight these people by having real money, gold and silver. And I guess the positive about this is if you're able to still stack, you can do it right now. Yeah, I know the premiums are very high, but yes, I think you'll be very thankful and happy that you did, that you were able to buy your winter tires or get on the lifeboat. I think that's where we are right now. So to my projection for silver, where I think it will be in around 2025. And why 2025? Well, watch my video from November because I don't want to go over it again. But basically, I compared the bull market in the 70s to the present bull market. And when I say present bull market, I don't mean from 2015 or 2016 when gold and silver bottomed. Well, for silver even, there was a lower bottom last year, but I look more at the secular bull market, and for me, the secular bull market in precious metals started around the beginning of this century. Some people have the low in 1999, some people in 2001. Let's go with 2001. So I compare the 70s bull market, which started in the late 60s, early 70s, topped in 1975, and then bottomed in 77. Again, we had a correction, a 2-year correction, and after 77, it just went up again and made an even bigger leg than the one from the late 60s, early 70s to 1975. Bigger leg, and silver topped at 50, gold at almost 900. So the secular bull market that we're seeing in this century is going to be dwarf that one, I think. And why? Well, because the inflation has been so dramatic. Back in 1980, the debt to GDP ratio, I think, was 35%. Now it's 130. U.S. had, under Reagan, when Reagan took over in 1981, the national debt was under $1 trillion. Now it's almost 30 trillion. The people didn't know about zero rates back then. They didn't know about negative rates. They didn't know about QE. It's truly epic inflation we're having. And of course, they fool people into thinking that there is no inflation. The first leg for me was 2001, let's say, to 2011. So that's 10 years. So it was almost double the time from, let's say, 1970 to 75. So that was 10 years. So yes, the correction was longer. Back then it was 75 to 77, it was a couple of years. This time has been 2011 to 2015, 2016, thereabouts. That's about 5 years. And yeah, so if we take another 10 years in time, it takes us to 2025. And that's why I said 2025. Also, the dollar index. I've done a lot of videos about the cycles in the dollar index. That I expect a bottom in the dollar index sometime around 2023 or 2025, depending on whether it's going to be a 7 or a 9 year cycle. I have the top in 2017, January 2017. If you don't believe me, look at the chart of the dollar index. That was the top. We haven't been above that level since. So if I extrapolate the leg from 77 to 1982, let's say 2015, end of 2015, beginning of 2016, to gold and silver, I get a price of around $420 for silver. And in the video that I made in November, there were people already talking about like $600 or $650 silver in January or next, in the beginning of this year. And I said, I'm not too sure about that. I think it's going to take longer. Yes, there's all the excitement about the silver squeeze and everything, but I think we need to set our expectations lower. Not that I wouldn't like to see silver at $500 next month, but yes, it's one of the reasons why people get so discouraged, because they set high expectations. In that video as well, I said if this leg from 2015, and I call that the fourth leg, if this leg is like the first leg of the secular bull market, let's say in percentage terms, the one from '01 to 2011, we could get to $150 silver. But the fact that the fourth leg in the 70s was a lot bigger than the first leg, that's what I did. I extrapolated it, and that's how I got that $420 silver. What about gold? Well, gold will be a lot higher too, even though I think silver is going to continue to outperform. So there you go. With that, let's quickly see where the markets are this morning. It's 8:30 a.m. London. As I said, the bond market, let's start with that. The 30-year bond auction went okay. I don't think it was perfect, but this morning we got the 10-year yield almost back to 160. So it's up 7 basis points. So that's not good. The 30-year bond yield is at 235, up 7 basis points as well. This is the MOPE, management of perception right now. They're telling people that you have to stay out of gold because yields are going up. And we know that is all really not true, because in the 70s we had stagflation. We had higher, the yields went like from 5% to like 16%. The 10-year yield in gold went up from like 100 to almost $900. Be as it may, though, the paper price of gold right now is down $13 at 1708. Low has been 1706. The high 1728. Silver is down 40 cents. It's at 25.70, down about 1.5%. So the high's been 26.18, low 25.60. When I made that video, I think silver was around 24 or 25. So yeah, it hasn't changed much. That 30 level is still very important. So when will people wake up and see that winter's coming or the Titanic is sinking? I don't know, but they will. You can bet they will. So the Dow right now is unchanged. NASDAQ 100 futures down over 1%. S&P 500 is down 0.4%. The currencies, we got sterling down 0.4% at 139.37. The euro is at 119.36, down 0.4%. Dollar continued to strengthen versus the yen. It's at 109.13, up over 0.5%. Dollar's up 0.5% versus the yuan at 650.80. High-grade copper is down 1.5% at 407. WTI crude is down 0.33% at 65.77. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.